Hello everybody and welcome to the midweek market update from Smack the Markets for the 6th of February. Now overnight we've seen quite a bit of volatility in a number of markets, a lot of the currency pairs that have changed direction after the sort of shake up from some fundamental news statements that have been delivered overnight. Most affected markets have been the Aussies, the Kiwi, the yens and the dollar, which really sort of doesn't help with the remainder of what's left out there. So let's go and take a look at how the markets have faring that we discussed at the beginning of the week, and take a look at some of the opportunities we're focusing on for the remainder of the week too. So first of all, gold. What we were looking at on gold, if you recall, on Monday, we're looking for gold as a retracement here. We're looking for possible pullbacks into the sort of 1,300 level here on the daily time frame. We thought this, certainly will do a pullback, but back into this area would be a nice area to start to look for long opportunities again on this market. Now, what's happened is the market sort of retraced about sort of 50% of the move, sort of got down to around the sort of 1.312 area, and it's just sort of drifted sideways from there. So looking at the sort of price structure here, we need to ask ourselves, is the market going to sort of eventually come back to the 1.3 level, or is it going to find enough strength here for the next leg of the move higher, which of course, we would be expecting a push higher than the 1.330 up here. Now, I think at this moment in time, it's a little bit difficult to get some indication. Certainly at the moment, the market here for gold is looking extremely flat from a technical perspective, but we can certainly start to build some sort of perspective in here. If I open up our 4-hour time frame, you can see here that we've certainly got a bit of a level through here around 1.320, where we've got these previous highs and lows testing. So the market breaking through this level to the high side, 1.3 sort of 21, let's call it, then we can see that there's significant strength, that it's put this sort of consolidation aside, and we can see that we are going to be pushing towards this new highs here in this trend. If, however, the market does sort of roll over and we get down below these sort of recent lows here, then I think we're going to see an easy sort of move back into 1.3 again, because there's not a lot in the way. In fact, there's nothing in the way here of potential support holding the market up. So we've got a relatively narrow range here that we can start to monitor and look for opportunities, deciding which way this market's going to break as that continues. Now, from a currency perspective, we're looking at Kiwi yen at the beginning of the week. Again, we were looking for long opportunities and for this market to continue above 75.50. So if we take a look at this on the 4-hour time frame, you can see from Monday, actually, the market did move above 75.50. It's actually sort of moved up a little bit, but it just didn't manage to really sort of capture to move much further until the news volatility that came in overnight, which affected many, in fact, all of the Kiwi and Aussie markets, and we can see the sharp move to the short side. So this nice, well-structured uptrend on the 4-hour time frame at this moment in time is broken, and we can see from current sort of positioning, there looks like not a lot in the way for a retest down here towards this sort of next structure point, which is around sort of 74.80. If we see continued weakness here, we could see then a move down to 7400 as well. From a higher time frame perspective here, we could easily see a bit of a retracement, and that retracement back into that sort of 74 area still looks like we're still going to have intact a daily uptrend in place. So this retracement still within the context of these higher time frame trends. Now, going forward, we're still seeing sort of dollar strength in the markets. So our favorite market here for dollar strength is is the dollar against the Swissy. And the main reason for this, if we come and have a look at this one from a higher time frame perspective on the weekly chart, we can see that the market's right up against the parity level again. So it's been testing this sort of area for quite some time now, and you can see how the market reacts around it. But again, at this moment in time, we're seeing continued strength in the US dollar. So the strength is there supporting higher prices, and just in the context here of the market sort of testing this the parity level more recently over sort of the past couple of years, or past sort of year and a year or so, we've got sort of higher lows as the market's sort of like pushing up to that retest that price point. Gets a little bit clearer when we come down to the daily time frame. So here on the daily, you can see that where the market is, you can see the parity level. It's much more precisely tested here on the daily time frame, and in the context at this moment in time of some kind of sort of uptrend sort of forming here. So certainly the strength of momentum, or direction of momentum, certainly seems to be on the long side here. Preferably what we'd like to see is opportunities above the parity level, so sort of possibly a bit of a break, a pullback to it, retest, and then looking at opportunities above that price point. Looking for, of course, if we can get a move above that area, we'll be looking up here for sort of 1.01,000 up here as our sort of first target level from a swing perspective. So there's a couple of markets that we're keeping a close eye on, and a bit of an update on the markets that we focused on at the beginning of the week. I certainly hope it helps. Look forward to speaking to you next time. Bye for now.